Are you a veteran, active duty military, a reservist, a member of the National Guard, or a surviving spouse of a veteran? Well, here's what you need to know about VA financing. First, if you're looking to purchase a home, it's really tough to beat VA financing. 100% financing, so zero down payment. The seller can pay your settlement expenses. You could even receive a refund at closing for things you paid for in advance, like your earnest money deposit, your appraisal, your home inspection, your pest inspection. If there's enough seller contribution left over, you could receive a refund. The seller could even pay the buyer's debt off. Up to 4% of the established reasonable value, as it's known in VA, can be used to pay off the buyer's debt. Buy a home and pay off debt. How great is that? And even if you've already used your VA entitlement in the past, you currently own a home, you have a VA mortgage on it, you could have remaining entitlement to buy your next home and buy it without a down payment, all depending on what remaining entitlement that you have. Now, if you ever thought about building a home, you've done some research on construction financing, probably saw the term construction perm, and often this is 2 transactions. And with VA, you could do the one-time close construction loan, 1 transaction. So, save some money on transaction fees. You can also lock into a fixed rate with the VA one-time close rather than waiting to have the home built with a construction perm loan and locking in when it's time for the permanent financing. Now, if you're out there home shopping, you're looking at property, and you see a property where you would like to live, but it needs work, there's VA renovation. You can do things like have a new roof and windows and doors and siding installed, upgrade the plumbing and electrical and HVAC, upgrade insulation, make the property more energy efficient, or increase the accessibility of the property if you have physical challenges. All allowed with VA renovation. And you can use that with refinancing as well. And speaking of refinancing, if you're simply looking to save money, there's the VA interest rate reduction loan, or the VA Streamline as we call it. You don't need an appraisal, you don't need to supply income docs, you need a good mortgage history, and it needs to make sense, and there needs to be a clear net tangible benefit, but it's an easy way to save money. And if you want to tap into equity, the VA allows 100% cash out refinancing based on the value. Other programs don't come close. FHA, conventional, it's 80% cash out limit. USDA, well, can't do cash out. Jumbo, 80% cash out limit typically. So anyone with those types of loans, if they want to tap into additional equity, they likely have to rely on a home equity line of credit, HELOC. That's usually prime plus a margin. It could be prime plus 1, 2, 3, or higher. And the rate can adjust once a month, once a quarter. I looked at a home equity line of credit agreement recently. The cap was 18.5%. Hopefully we never get there, but being able to lock in on a fixed rate, access 100% of your property value is a great option to have if you want to tap into your home equity. Now, VA, unlike other mortgage programs, does not have a monthly mortgage insurance. With FHA, we see MIP, mortgage insurance premium. Conventional, we see PMI, private mortgage insurance. USDA, we see the guarantee fee. They all do the same. They protect the lender in the event of a default resulting in a foreclosure, which is going to cause the lender to likely take a loss. It's very expensive, the foreclosure process. It can take a fair number of years to get someone out of a home. I've seen examples of 3, 4, 5 years. No payments are being made by the borrower. Lender still has to pay taxes, otherwise there could be a tax sale situation. Has to pay insurance. You don't want the property being damaged or possibly destroyed. You don't want a liability issue, so you have to carry insurance. And then there's the attorney fees associated with the foreclosure. So it's really expensive for a lender to foreclose. They, again, will likely take a loss. That's why there's a need for mortgage insurance. VA does have a funding fee that's usually financed as part of the loan. If you're using VA for the first time, doing 100% financing, it's 2.3%. If you're a repeat user, it's 3.6%. Based on the median sales price, according to Redfin, as of November 2023, $395,000 across the U.S. That's probably anywhere from $9,000 to $14,000. And if you have a service-connected disability, you're exempt from the funding fee as long as it's 10% or greater, service-connected disability. That's a nice savings over the term of the loan. On a monthly basis, it's probably close to $50 to $75 per month based on the $395,000 median sales price. And if you have a VA or just a service-connected disability and it's permanent in Maryland, you're eligible to be exempt from property taxes, full exemption. And across the country, there are many states that have either a full or partial exemption for disabled vets. So be sure to check that out wherever you're looking to buy, or if you currently own a home, maybe you've had a disability rating increase, but being exempt from property tax, definitely a great advantage when you're looking to buy a home. A recent change here in Maryland, as of October 2022, a veteran looking to buy in Maryland can apply for that property tax exemption before they go to settlement. And it used to be you had to buy the home first, go to closing, and then apply for it. Being able to apply for it, be approved for it before your settlement date, it lowers the money needed for closing, reduces the amount needed for seller contribution, which could help you with your contract negotiations, and ultimately could help you qualify for more home if you're approved for a tax exemption prior to your purchase. So a great win for veterans there. Lastly, if you are a surviving spouse, you could utilize VA entitlement to purchase a home, to refinance a mortgage. If there was a service-connected disability, you'll likely be exempt from the funding fee, and you could be exempt from property tax. Here in Maryland, a surviving spouse can apply for the VA property tax exemption as well. So if you have any questions at all about anything I discussed in this video, feel free to reach out. Just click on that link tree in my bio or in the description. I'm also going to be placing some links in the description for further reading on some of the topics I discussed in this video. And if it can help you in any way understand VA financing better, just reach out.